there is still some fragility in the market today. But when it comes down to the economy, as well as some of the different elements of where to go with your portfolio, there's a lot of great aspects to it. Now we're going to be discussing that, plus how to actually gain some income from your portfolio without having to sell or even have dividends. So we have a lot to get to, and I'm looking forward to it. I want to start with economic and stock market risks. You see, there's a lot out here today that we're actually seeing some risk with, especially when it comes to the volatility that's out there in the last number of days that's really crept up. Now, that's really because of the fact that there's this higher than expected inflation environment that we're starting to come into, and the expectations that we're not going to get a rate cut the way that we had initially thought as an economy. So that's why we're starting to see it, but what can we do about it? Well, we're starting to see strength in many other areas. And when we take a look at those areas, namely China, we can start to see there's some huge potential there. Now, I'm not saying we need to absolutely be invested in China. What I am saying is that if the Chinese economy starts to come out of a 2-year recession and start to grow, well, a lot of their trade partners, and especially a lot of the Asian countries, have growth because of China. So their economies can actually start to pick up as well. So we can use emerging markets as a great opportunity for growth just because of China. Now, I'm not saying this is going to necessarily happen the way that we all think and is just going to be without any volatility, without any ups and downs. What I am saying is that this could be another way that we can be looking to diversify away from the US and away from the volatility that we're starting to see pick up here. Now, another element though that we can be looking at is Europe. And again, Europe has been in this really a 2-year industrial and manufacturing recession. And if they start to turn their corner, which is what we're predicting, that could be very helpful. Now, yes, here we've been in kind of this pattern that we've had of slower growth in our economy and slowing of inflation, but that's shifting. And we could actually start to see, even as early as May, a change over to a lead 2 stage. Now that's the Lion's Wealth Economic Activity and Development, stage 2. And what that means is we're actually seeing reasons for growth in our economy, as well as some inflation. Now that actually is a great thing when it comes to how our stocks and investments are doing, mostly. But that's where we can really take a look at the portfolio and make sure we're invested correctly for this stage. Let's spend a moment talking about that then. Portfolio changes. With the markets volatile, like I've been talking about, there's still really room for adding in some different investments that may grow in this volatility. So yes, we've talked about gold before. Yes, we've talked about many other types of investments that can lower the overall volatility, which is what we've been doing over the last couple of weeks. But we continue to keep having healthcare and now emerging markets and the growth stocks as part of our portfolio. So nothing new has actually changed with portfolios, but what we're starting to see is that different elements are starting to work. So bonds used to be a safe haven, a place that we could go to when times were tough, but that's not that way anymore. And so we could see fluctuation in bonds in the same way we can start to see fluctuation in stocks. But if we start to look at the correct places to be invested, the correct, what we call sectors. So take healthcare, for example. As of right now, that is a place that's going up in price. Now that alone is actually one way that we can lower some of the overall risk. So we can take away and remove some of the elements that are not doing as well. And this is called being strategic. When we remove some of the elements that are not doing nearly as well and add to the ones that are. And that strategic nature is what can actually help us to say that we can be improving upon the portfolio even in bad times. So yes, when we take a look at what's working and what's not, removing the stuff that's not is actually very good to do at times and replacing it with stuff that is. So that's what we're going to be doing. And like I said, no changes right now to the portfolio, but reiterating the reasons why we're doing what we're doing. And that brings us to wealth management and advanced planning. This is something different today that I want to be covering. You see, we've had a huge run up in stocks over the course of the last number of years, but we still need income. And some of it is actually burdensome on a tax basis, taking that income. So what we can do in this situation is use a strategy called covered calls. Now, what this does is helps to generate income for you. So it can potentially actually safeguard some of your stocks from going down in price, as well as generate some income that you can live on that is not tied to a dividend and not tied to selling the stock. Now, before, even up to the last number of months, it really has been that you have to watch your portfolio almost on a daily basis to make this work. But that's no longer. There's many different ways that we can use technology to your benefit. And when we pair technology and using those covered calls for income, we have a great way of saying we can generate that income, especially for, well, whether it's retirement, whether it's for cash flow, or just any other little elements that you have. But we can also make sure that we're maintaining the stock that you want for the future and maintaining the options that you have. So when we pair covered calls and a strategy that's right for you, that can be a recipe for some very good income. Let's change the topic now and talk about our second opinion service. With everything that we've been talking about with these covered calls, with the markets and where the economy is headed, as well as different portfolio options that you have available, you may be having some questions. And whether you or someone you actually really care about needs to have a second opinion to stress test your overall wealth plan, that's what we're here for. You see, we'll take you through what we call a discovery meeting, just figuring out where you're at today. And we'll also figure out where you want to go in the future. And then we'll take a look if there's any gaps that exist, especially with elements of your wealth plan. And when we pair that correctly, we can come back and identify any gaps that are in your plan and then look for ways to close them. And that would be very beneficial to you, knowing that you can have the best ways moving forward, but it can also be something that you are looking to help improve the overall clarity for your family as well. That is the second opinion service, and I would invite you to take us up on that. You can click the link below this video here, and we can actually walk through what that would mean for you. As we're talking about many things today, I know that you may have questions. So that's where you can actually reach out to us, because we would love to not only answer those questions, but help you to navigate all the complexities of the wealth plan, but also where we're going on an economic and also your investment front. With that, take care.